Testing 1 2. Please press 1 in the chat if you can hear me right now. Good morning, Tims. 1. All right, let's get started. Looks like the bell has already rung for us, so let me close out of this. We'll keep this open. So SPY currently is up 0.75% today. After some good earnings from a few companies we had, NKE posted very good earnings. They're up by 14% today when I decided to buy some put debit spreads. So obviously going to get slaughtered by that position. That's kind of the caveat whenever it comes to trading around earnings. But let's see. I think I'm probably just down by the max loss for that trade, or just about. Yeah, these are going for 0, so there's really no point in trying to close them at the moment. The bid is -1. The ask is 1. It is 1 minute into the market, so maybe the bid ask will change around after a few minutes, but yeah, that trade definitely did not go in our favor today. And assuming, our strike price was saying that it will be below 100, super slim chance that happens at this point. Given that the market is up 0.6% today, that only kind of feeds into the rally that it's experiencing, but looks like SPY is pulling back a little bit. I do want to see what other earnings ended up coming out. So let's head over to investing.com. Check out the news there. So this is where I check my news every morning. I go to the most popular. So we have Nike cheers. So Nike earnings. Zelensky visits the U.S. And then Tesla layoffs. What is moving the market today? Then you have oil prices that are on the rise due to U.S. drawdown and then Chinese fears. So let's see what they mean by U.S. drawdown. We'll read into this headline a little bit more, I guess. I just want to see what exactly is going on with oil. So Brent crude, we're up 177 or 2.2% to $82 a barrel. Wow, that's actually a pretty sizable jump. It was trading in the low 70s last week, it seemed like. So oil is starting to make its way back up. That's also in part due to the dollar falling off recently so much, right? So UUP topped at 30.76, currently is trading at 27.9. So very steep drop, and then we had a very big sell-off yesterday because of what's going on with Japan. We talked about this a little bit yesterday, but basically Japan made an unexpected move with their bonds to where they ended up raising their rates by 1/4 of a basis point. And Japan has basically held their rates at the same place for the longest period of time. Like, they are like the most stable economy. If you look at their stock market, it kind of reflects that. Like, it just trades flat. But they have such stability, and now they're raising the rates in fear of, inflation or whatever it might be. I'd be very shocked, actually, if they had inflation because of their aging population. But now they're fearful of inflation affecting their economy. So they're starting to raise the rates, even though it was a very marginal amount. It was only 1/4 of a basis point up from 0.25 before they went from 0.25 to 0.5. That was still a very unexpected move, which weighed negatively on the dollar. We saw a gap down yesterday. And it does seem like we're trying to fill that gap. So maybe oil ends up coming down. So basically oil and the dollar have an inverse relation. Whenever the dollar goes up, usually oil comes down, and then vice versa. Whenever the dollar goes down, oil will go up. So that's why you've seen, or let's see. Yeah, so the dollar is going down at 28. I guess oil's fallen with it. Let's see. QM is the ticker that I /QM is the one that I use. I guess they've gone down in tandem. But yesterday oil was up slightly, and then again the dollar was down. So generally in the short term they have a negative correlation with each other. I think in the long term, though, they trade with one another just because it's based on supply and demand, right? Whenever there's less demand in the economy for oil, that means our economy isn't doing as well, which means that the dollar generally doesn't do well because you need to raise rates in order to, boost the economy, which means that there's a higher supply of dollars, which ends up sending the value of the dollar down. So, little macro for you today. Let's go to the VIX. Is trading at 20.6. That's very low. So that's another drop down to the 20 mark that we've revisited, plenty of times this year. It is elevated if you compare it to, say, the last 5 years, but I think given still the uncertainty that we have in the macro space, I think that VIX is still a long position. So I have, I think, 250 shares of UVIXI currently. If we go over to my Robinhood, I'm sure that I'm down significantly on the shares, but I ended up buying at 770. So right now I'm down about 10%, 9%. But I do want to start adding more to this position because I do think that volatility is likely to continue rising, and part of the reason is because it's very cyclical. Like we saw all of these rises, and yeah, you'll get the short-term drops, but generally these cycles last for looks like about let's see, we can take the average, I guess. This one was January to March or April, so that was 3 months. This one was April to June, which was 2 months. This one was June to August 15th, which was 2.5 months. And then this one was August all the way until November. So middle of August to end of November. That was actually a good 2.5, 3 months. So usually the average cycle for the VIX lately, at least, this could always change, trends can always change, is about 2 to 3 months. So I think that it's better to be buying into VIX. Since we're in the beginning of the cycle, we're only 1, 2, 3 weeks into this. I think it's a better time to be buying VIX right now. So I'm going to maybe start to dollar cost average and try to close it, close the long position. I would assume like 6 to, let's see. So if it's a 2 to 3 month cycle, we would want to close it in week 4 through 6, right? Right now we're in week 3. So assuming that the cycle peaks right in the middle, let's see, 1, 2, 3, 4, 5. Yeah, that was the case. And then this one, the peak wasn't actually until later in the cycle. It looked like looks like 10 weeks into the cycle, it seemed like there. What else do we have? This one was about the middle of the cycle, and that was a 3 month period. So that was about 6 weeks that it took. So I think it's better to be buying VIX right now. And probably dollar cost averaging is going to be the best method. You will lose money based on the share value coming down because of the leverage that you gain out of UVIXI, because it's a 1.5 leverage VIX trade. So they gain their leverage from futures, which lose value just like options in their theta. So you will lose value from that, but I do think that it's going to go significantly higher. Probably back up to, I would assume, let's see what the average high has been in these cycles. This one was 35, previous was around 35.2. This one was 37. This one was 38. Obviously, this isn't a lot of data to go by, so you can't really trust this 100%. But the average was probably around a 35.50 high, right? So right now it's trading at 20.64. We divide 35 over 20.5 basically, and you get about a 70% return out of the VIX itself, which would translate to 1.5 times that. So that would be 1.7 times 1.5. That would be a 255% return. Actually, sorry, this should be a 70% return. So this should be a 155% return. But that's not including any time decay associated with the UVXY share. So I'm going to buy some shares of UVXY. Not really sure how much I want to spend on it, really. I would probably want to put down maybe 400 a week. So let's see. If I buy 60 shares, that's $420 almost. If I buy 55, that's $383. So I'd rather just do 60. So adding to the UVXY position, currently I have 250. Buying 60 more, so I'll have 310 afterward. And you can sell covered calls against UVXY. That is a possibility. I probably wouldn't recommend selling covered calls because then you could give up your right to own the 100 shares. But let me post this over in the trade alerts for the premium Discord. Any big news coming out today? No, it's a very slow news day. The big news today is the got distracted. The big news today is Nike earnings. So very, very slow news day. New option, or not new options alert, buy alert, premium 101, premium. Just bought 60 shares UVXY at $6.98. So now I have 310 shares at $7.52 a piece. Let me take a screenshot of that. Important data. 310 shares now at $7.52 each. And today is Wednesday, so the day before I'm supposed to start dollar cost averaging into regular shares of companies. But yeah, Nike was the big news for today. They had a good earnings report coming out at, let's see, 85-cent earnings per share versus 65-cent earnings per share expected. So let's actually review their earnings per share. Review their earnings. So I'll do a little earnings review in today's session, give y'all like what to look for in an earnings report. And that way, like, y'all can, trade for yourself on these earnings report and see why your trade went well or why it went bad, right? So you're going to go to the website, type in Nike Investor Relations. You can do that for any company. It could be Adobe Investor Relations, whatever. You go to SEC filings. And this doesn't get posted until the next day, typically. It actually hasn't been posted yet. You want to look for the 10Q report, which they haven't released, it doesn't seem like. We can also go to sec.report /ticker/NKE. Apparently that, what? I guess they changed the name of it, maybe. Nike 10Q. Let's see if we can find their latest 10Q somewhere. Oh, I guess they changed it to sec.gov. I thought it was sec. It used to be sec.report, but they changed that. So this is their latest 10Q filing. We need to look for the date that it was put out. Does it say when this was put out at all? Sometimes these SEC filings are a bitch to read. Yeah, I'm not seeing the date that it was filed. I guess we can just compare what's on their investor relations page. So if we go to quarterly earnings on their page, if we go to second quarter results, we can look at their tables. So this is their statement of income. So we'll go to the statement of income here and compare if it's the same thing. So revenues was, this is from 2016. What the hell? Why would they give me information from 2016? Oh, Jesus Christ. Ugh, that's dumb. Okay. I guess we can search NKE filings. AK report, 10Q report, October 6th. Yeah, so they haven't reported the 10Q. So you have to go to their, I'll link this. You have to go to their investor relations page and pull it from here. The problem with this, though, is that it doesn't have like the full report of GAAP and non-GAAP. So what GAAP is a standard way of reporting earnings, and then non-GAAP, they can include share buybacks, employee stock compensation, and things like that. So their earnings per share came in at 85 cents again versus like 63 cents is what was expected. But this, I believe, is on a non-GAAP basis. Yeah, so if you read this right here, the percent change has been calculated on a non-GAAP financial measure. I guess actually that is based on the footnote. So let's see if this is GAAP or non-GAAP by looking at if it has any footnotes to it. It's much easier to read the regular SEC filings, though. Like, they give you a clear GAAP earnings statement and then a non-GAAP earnings statement. But these ones, they make it a little bit harder to kind of pull apart. So let's just assume that they did 85 cents non-GAAP. So it was a very good earnings report compared to what was expected at 63. So obviously their stock went up a crap ton. It's up like 15% today, almost like 13 or 14%. So good to see that for their stock. Obviously didn't work out well for me. But I think we had some other earnings reports. If we go over to Twitter and eWhispers, my favorite website, to find the earnings calendar. What else did we have? We had FedEx reporting, it looked like, after hours yesterday. BlackBerry. I'm surprised BlackBerry is still around. But let's see what FedEx did. How is BlackBerry still around? That is shocking that they haven't gone bankrupt. But FedEx is up 3% after their earnings report came in at 318. Expectations was 277. So it looks like Wall Street is just setting the bar super low for the companies to beat. And that's partly to be expected. That's what I actually saw in Nike too. Like, I commented on this yesterday. I thought that their earnings per share estimate was very low if you looked at it compared to previous years. If you look at the drop from the quarter before to this quarter, you own shares of BlackBerry. Is it for the memes, or do you actually believe in BlackBerry's recovery? What if BlackBerry actually wins like the VR, virtual reality, or AR race, augmented reality? That would be a fucking doozy. Free stocks. Okay. Understandable. Anyway. That's hilarious. So FedEx is up 3% after their earnings. If we look at the 2-day chart, immediate reaction was down, then recovered, and now it's actually coming back, interesting enough. Maybe we can take a position against it, but they did have a good quote unquote earnings at 318 versus 277 expected. But it does seem like they're just kind of falling off of a cliff today. Maybe we can compare previous year earnings, and maybe that's the reason it's sinking. So 318 or 10 earnings per share for this year. 483 earnings per share the previous year. 483 the previous year. So their earnings per share has really come down. So I think I'm going to take the downside on that trade. Just based on their year-over-year comparisons, that is not good at all for the company. Now, Nike was actually pretty fine compared to their previous years. It came in just about what it was the year before, so not really much to worry about there. But I do want to take a short position for FedEx after the earnings, given that their earnings per share has dropped so significantly over the past 2 years. Let's see. And I think maybe it revisits 164 where it closed yesterday, but odds of that are obviously a lot slimmer than something like 166 or obviously like 168. It's already trading at 168.75, so but I say we go back down. Well, it looks like they only have $2.50 spreads. So let's see. If we look at a 165 put debit spread, we're paying $1 for it. That's actually pretty decent. To assume that this will go back under 165, and we're only paying, actually we're paying less than $1 each for each of these. Significantly less. I think I'll take that. Let me raise the strike price. That'll obviously increase the odds of the trade going in my favor, but it's going to cost me more money. So this one's 135, so I'm risking 115 to make 135. 1-to-1 risk reward ratio, assuming this is going to be below 167.50. I don't think I can pass that up. That's a good fucking trade. Excuse my French. That is a good trade right there. Let's go to Aries. So I want to check the bid ask on the Aries, just because Robinhood is always going to misquote you for spread options, especially. But if we assume it's going to be under 167.50 with a put debit spread, this trade is going for 112. That's not bad. I'll take that. And I'd even be willing to pay up to 115. That way I can make 135 if I'm right. This trade I'd probably put down 300. So only a few spreads. But my max profit is 400. My max risk is 350. So pretty good risk reward that I get out of it. We are going to get some volatility. We were supposed to get some volatility today, actually. There was supposed to be economic news dropping today, if I remember correctly. We'll talk about that after I post this in the premium Discord. So this is a new trade alert. Premium. All right, just opened, a new FedEx put debit spread. This one expires this Friday, 12/23. Let's see, there we go. And strike prices. All right. FedEx earnings came in well above expectations at what was it? 277 expected versus actual was 318. But this is down, emphasized significantly. From from the past 2 years. So if we look at the last 2 years, the same quarter from the last 2 years, this was 483, and then the one before that, let's see, 1, 2, 3, 483 again. So that is a drop of 3.18 over 4.83 is 71%. We subtract 1 minus that. That is a drop of 28% in their earnings per share. 28.2% year over year drop in earnings. Not a good sign, to say the least. And, obviously it's trading up with the rest of the market today. But I do think that we're going to get some volatility sometime today and probably tomorrow. Nike sponsored half of the teams in the World Cup. I think their sales went up because of the World Cup. That is definitely possible, and I would imagine there were quite a bit of jerseys also sold by Nike during the World Cup, so they probably benefited from that. Interesting. But my assumption was that they would have a bad earnings report because Lulu had a pretty rough earnings, but I guess, Lulu isn't like the sponsor for the World Cup. Like their shit's too expensive for the general public versus Nike. They do make more premium wear, but then they also cater to, everybody else that can't afford a $100 t-shirt to wear to the gym. But anyway, what was I up to? Oh, I wanted to look at the economic calendar. So let's go over to the economic calendar from investing.com. There was something important today, if I remembered right, but I guess I misremembered. There's nothing important for Wednesday, interesting enough. I thought consumer confidence. Oh, yeah, consumer confidence is supposed to come out, and it's coming out in 3 minutes at 10 a.m., so that will be fun. So expect a little bit of volatility around that. I don't think that it's going to have a major impact on the markets. If you compare that to what's coming up tomorrow, which is going to be GDP quarter over quarter and core PCE prices. That's actually not the actual PCE number that you want to look for. It's actually on Friday that's coming out. But you have GDP tomorrow, and then you have initial jobless claims coming out tomorrow at 8:30 in the morning. So expect some volatility tomorrow. That'll probably help out our FedEx trade if I had to guess which way the markets are going to react to jobless claims and core PCE prices. I'm sorry, there's probably a lot of engine noises going around. God, it's so freaking annoying. Sometimes I would just wish the whole world could go to electric vehicles as soon as possible just to get rid of the noise pollution. But Friday, December 23rd, core durable goods is coming out at 8:30 in the morning. PCE coming in at 8:30. Yeah, so you got PCE coming in. That's inflation at 8:30. You have personal income and spending at 8:30. Then you get the Michigan report. That's my favorite report to look at, is the Michigan economic report. That's coming out at 10 a.m. tomorrow. So expect some volatility tomorrow, especially, and then Friday. Maybe a little bit of volatility today too, based on the consumer confidence report that's about to come out. I would imagine that consumer confidence is probably going to start waning or going away. But let's see. Let's go to today. Make sure that we have up-to-date info. We're about to get it in probably 30 seconds if I had to guess. We should be getting it right now. All right, so let's check the consumer confidence. Came in at 101.0 versus 100.2 expected. So consumer confidence for December was actually very good. So what consumer confidence is, I'm I'm thinking that it's a survey from consumers about how they think the economy is currently going. So what it says is the measure of consumer confidence and economic activity, leading indicator that it predict consumer spending, which plays a major role in overall economic activity. So if consumers think that the economy is going well, that they're probably more likely to spend more, which is going to make inflation that much worse. But this is a relatively low reading compared to, the past year. It's been 111. The lowest point was 95.3 in July. And then this is the second lowest reading this year. So definitely lower. I'm interested to see what the numbers actually represent, if there's any like rhyme or reason to 101 versus just putting an arbitrary number of like 10. Doesn't look like there's really anything to it. But FedEx, it looks like FedEx is going up. That must mean that the markets are rallying on this report. Currently trading at 170 after we opened it. Right around here when I was trading at 169-ish. SPY, I'm sure, is probably going up with this report if FedEx is going up. So maybe we assume that it's going to be above 385 if this is a good report. I don't know. I'm not really sure how to read this report. It's the second lowest reading for this year, but it's also, above 100. Let's compare it to, I guess April was like the worst reading over the last couple of years. April of 2020 at 86. So comparatively, consumers don't think that the economy is as bad as it was during COVID and during the lockdowns. Interesting enough. And again, the lowest reading this year was 95.3, so it's above that. But it looks like the markets are reacting positively to it so far. I would imagine we go to 84.50 level. That would be a decent trade to take, and that would be a hedge against our FedEx. That would also be a day trade because I don't want to hold that into tomorrow, given the other data that's coming out later. But GDP, that is. But I'm going to open maybe a call debit spread that expires today, assuming SPY is going to go... we could do 384, 385 strike prices for a call debit spread that expires today. Right now, it should be going for around 40. All right. Ish, just given that it's at the lower strike price. They're actually going for 45. Some more to lose on that trade if it's not actually a bullish reaction to this data. I would probably want to close if we go below like 383, significantly below 383. Good morning, Cameron. And in that case, these ought to be going for maybe around 30 cents each, if I had to guess. For this trade, again, I'm not super confident in it just because I'm not sure how to react to the consumer confidence report. Like, it's very ambiguous, it feels like. So I wouldn't put a lot of money into it, but they're actually pretty expensive contracts, if I'm being honest. Let's see. Like right now it's trading at 383.87, so these contracts should be going for less than 40 cents, but I'm looking at them right now, they're going for 42 to 44. So you're overpaying if you're opening these options. And I usually don't like overpaying for options unless I'm very certain in the trade going my way. And this one I'm just not super certain on. All right, it looks like we just caught a balance, I guess. Not really going up yet. We'll see the second reaction, the second 5-minute candle. If we do go up to probably 384 and some change, that should give us a rally, but haven't seen it yet. Haven't seen it quite yet. Alright, it looks like I might open this. Oh god, these contracts are getting expensive really quickly. Yep. Okay. Alright, so I opened that call debit spread assuming that we're going to be above 385 at the end of the day. Looks like so far we're having a positive reaction to this economic data coming out. So we'll see how this plays. New options, alerts, premium 101. Premium. Whoops. Just opened a new SPY called debit spread expiring today, 12/21 at 47 each. Strike prices 394, 395. Okay. And they're probably already up decently. Let's see. Yeah. It's already trading at 384.30. And if it hits all the way at 385 way up here, then these contracts should be going for around 60 each. But my plans is to close if we revisit probably under 383. So I'm going to create an alert if we go back below there. Maybe we call it 383.15 or so. The balance of right here in this morning. 383.1 actually. So we'll create an alert. That'll be our exit for the bottom at 383.1, and then our exit at the top, hopefully above 384.5, and then ideally 385. So let me start thinking about closing this option. So this is the option that I opened, 384, 385, called debit spread. This one expires today. Day trade, obviously. If it expires today, it's a day trade. And let me zoom into this so we can make it more visible on the right-hand side. So I opened these for 47 a piece. Right now they're going for 51. I opened 20 of them, so right now I'm at an $80 profit. Let me decrease this so we can see the charts. Looks like we just broke that 384.50 level, and I'm going to close half of these. So I'm going to close 10. Right now the bid is at 51. Doesn't look like we're going to get filled at 51, but we'll see. Yeah, we got filled at 51. Okay. So I'm still holding the other 10. I opened 20 total. So nice little scalp profit on that, and then I'm going to hold the rest until we hit 385 and above. Closing options alerts, premium 101, premium. Just took profits on 10 of 20 SPY called debit spreads expiring today, 12/20. Today's the 21st at 51 each. Okay. Looks like we're going right above that 384.50 mark, but not breaking through just yet. So let's see how this plays out. So far, the reaction to that report was bullish. Looks like we also got existing home sales for November. I'm assuming this is down 7.7% versus 5.4%. Yeah, the housing market is kind of shitting the bed at the moment. Let me actually look into that report, because I am looking to buy a house soon, so it is somewhat relevant, but not so relevant to the stock market itself. Let me go to economic calendars where you'll find that. Looks like these are going for 55 now, so we're up another $80. Nice little small profits. Looks like we're about to hit that 385 mark pretty quick. Nope. Sold off, but yeah, existing home sales for the month of November was down 7.7%, versus down 5.4%. So housing sales is just plummeting like a freaking rock at the moment. It's pretty nutty how dry the buyers are right now. Like everybody was talking about, oh yeah, I'm going to be buying during the crash, and now nobody has money to buy during the housing crash because the rates are so damn high, which just made it overall unaffordable. But let's see. Yeah, so this was 4.43 million homes sold in this month, November. The last lowest point was in May of 2020. That's pretty crazy that home sales have fallen. How are home sales up in March and April, though, of 2020? That's interesting because COVID really got it sparked during that time, March, April. But home sales plummeted to 4.33, and now they're basically at the same point that they were back then. That's pretty crazy. And that's existing home sales. Let's see, month over month. So this is just the percent rating. And then that consumer confidence. Again, not exactly sure how to read it. Like it's good, but it's bad. Because like this is the worst that we've seen in a while, since July at least, and before that was like March of 2021. So it's definitely declining. Short term, it seems to be increasing, interesting enough. 95.3 at the lowest point in July. I guess it's just kind of averaging around, I would say, yeah, I guess 100 is about the average. But let's see. Wanted to buy in-phase puts, but it cost $3,000. And working with limited capital, so thinking about doing a put spread. How wide should I do it? So in-phase, I think that's a super expensive stock, I think, if I remember right. Yeah, $300. So basically what Tesla used to be. It's an energy company, and I think I remember their business being all into like solar panels, but I don't remember exactly. Let me do a little bit of research into it. But yeah, this one's definitely trading at a high, currently at 300 versus a all-time high at 340. So it's definitely up there. They got some analyst upgrades recently from BMO Capital and Northland Capital. The earnings per share is definitely doing well. 125 earnings per share versus 107, 79 cents the quarter before. So the earnings per share is on the rise, which is good. That's unusual. Let's see. In-phase. Reliable home. Harness the sun. Yeah, this is a solar company from Fremont, California, of all places, too. That's exactly where Tesla was headquartered. I guess California is a very sunny place, so it makes sense. But let's see. Yeah, so it's a solar company. I mean, solar definitely can be good, but like it costs so much. I'm assuming that's why their profits keep going up, because they're gaining more market share, and like they have an expensive product that people want to buy because they're trying to move away from gas generators, I'm assuming. So I don't know. It's very hard to say that the earnings per share will continue to go up, but it definitely has the last 4 quarters. Like it's gone from 73 to 125 cent earnings per share. So I don't know if I would want to bet against the company, but considering that it's very close to all-time highs, I can see why you would want to short it. The way that I would probably play it, let's see, their earnings per share, the next earnings is going to be 2.7. February. So I don't know if you want to play their earnings or if you want to play it long term. But if you go to ENPH, look at the share dilution. Yeah, I mean that happens with every freaking company. Every company is diluting their shareholders like no other with their employee stock compensation. Like they're just adding so much to the float with all the stock options that they're giving off. Hey, it's Amit. Bye, Palantir. Okay. If Amit says so. Anyway. Yeah. So, yeah, they have 250 strike prices. If you want to play it short term, I'd probably go on their next earnings report. I would actually be bullish ahead of their next earnings report because the trend has been up for their earnings per share. But if you want to take a longer term bet on the downside, I think that could actually end up paying off. And I would probably base that off of some of these candles of significance from the weekly chart. If you want to be conservative, I would use this candle right here. If you want to play it a little bit wild, I would use this candle. So the support here would be from 253.10 plus 253.1 plus a close at 305.25. You divide that by 2, and you get an average of 279.18. All right, so that's your first support that you could take a position against. Nice little support level 2. God damn it. 279.18. Bulling on them long run, but bearish short term. Interesting. I would take the opposite approach. I would be bearish in like the 6 to 12 month range, but in like the 2 to 3 month range, I would be bullish. Just because their earnings per share has continued to rise. So ahead of their earnings report, I would imagine their stock is going to do well. Obviously, after the earnings report is a different story, depending on how the earnings actually comes in, but 213.49. God damn it. 213.49 plus close at 284.18. Divide that by 2 and you get an average of 248.84. 248.84. 248. So the way that I would trade this myself would be a put debit spread. Conservatively saying that they'll be below maybe 279 in 6 months. So I'd set my expiration date for like June. Let's see. June 16th of 2023. Saying that they'll be below 280. Right, so you would buy 290, sell the 280. Oh, it's a $10 spread. So you're still paying a fat premium for it, $600. The bid ask is probably stupid wide because Robinhood. You might be able to get away with this for like $500 if I had to guess. And then if you want to be more radical with this, I'd probably go with the September expiration and assume that it'll be below 250. So that's the way that I would play it. I don't really like 6 to 12 month options because I think there's more money to be made in the short term. But you could do that 260, 250 put debit spread. That one's actually more expensive. That's interesting. So if you add that extra 3 months, you're paying an extra like $150 at minimum. So I would take the 6 month trade and I would assume that it would be below 280. That's the way I would do it. Yeah, no problem. Let me check the premium Discord, see if anybody's hitting me up. What the hell? All right. Where is the SPY at? It's at 384.76, so it seems like it, oh no, it's still trading at the same level that I was previously. I just want it to hit 385, please. Please, let it hit 385. I might just close now. It does seem like it's kind of stalling out, but it does seem like it's a little bit bullish. Let's see. Let's zoom in a little bit. 384.77, 384.83. Yep, it's going. All right, I'll get rid of the rest of these for 58 each. I'm not going to be greedy and ask for 60. Now we just pray that Robinhood fills my orders. Am I getting Palantir Leaps? I am staying far away from both Palantir and Leaps options. No offense, Amit. But I just don't understand the company that well. Palantir has always been like a black box to me. What's inside, I don't know. I do think that their CEO has a very eccentric personality, very similar to Elon Musk kind of personality. He's very interesting character from what I've seen from him. And sometimes the most crazy people are the most genius. Yeah, in Carp I trust. All right. Come on, SPY. I just need like 20 cents. Please. Please, somebody give me 20 cents. Don't be an asshole. I feel like a beggar out here. Please give me your quarters. Spare change for the bus, please. Help. Screw you, SPY. Come on. Alright. I guess I'll just be even less greedy and try to close these at 56 or 57. Bleh. I hate Robinhood, man. I hate it. But I still keep coming back to it. Why do y'all gotta do this to me? Alright, I'm actually gonna call up Aries customer support today after today's live session. I am done with Robinhood and getting ripped off. This is my last, not my last trade on Robinhood, but because I have to transfer the money and that's going to take a minute. But anyway, yeah, so took profits on that bad boy. Let's see. Closing options alerts. Whoops. Premium 101 freemium. Just took profits on the rest of the SPY 385, 384, 385. Call debits red expiring today, 12/21 at 57 each. Originally, I picked those up at let's see, $940. So 20 for 940. 940 over 20 is 47 each. Opened at 47 each. Closed these at 0.57 each. And the other 10 closed at 510. What is glitching on my screen right now? Jesus Christ. So made a total of 570 plus 510 minus 940. $140 of profit. Not too shabby. Obviously we lost some money thanks to Nike earnings, but at least made some of it back with a nice little day trade. So it's probably all the trades that I'll make today. We only got about 5 minutes. So I'll just hang around, answer some few questions that y'all might have for me. Probably only have a couple enough time for a couple questions, but you'll have any questions for me, let me know in the chat. And also leave a like on the video before you leave. Thank you. Feel like Robinhood has better prices than TD? Really? I don't think so. I think TD is up there just because they're established. Maybe when it comes to like single legs, but even then, I don't think that's the case. Whenever you pay a commission, like TD Ameritrade, Fidelity, and basically all the other major brokerages, you usually get a better fill. eToro, I've heard that E-Trade has some of the best fills. Even though I despise the way that their platform looks, E-Trade has some of the best prices that I have seen. Like, there's people in my Discord that use E-Trade, and they're always getting better prices than everybody else in the chat room. Let's see. Using Questrade, thinking about IKBR, but found them to be laggy, so it'd save on fees. Interesting. So I'm getting some data on what brokers y'all are using. That'll be helpful for making my app that I'm going to use to help track y'all's trades for you automatically, because all the solutions that I found for options tracking so far, you have to manually input it, and we're in 2022. There's no reason to be manually inputting trades anymore. So I found a developer. Very happy with the developer that I found. He actually trades options himself, so he has a little bit of background, and he's a degenerate just like you and me. So that's nice. And soon enough, you'll have an automated tracking platform that's going to give you all the data that I like to collect in a stupid little spreadsheet that has yet to be updated in the last week because I'm too lazy to manually input it. But now I'm going to have this automated one. So solving my own problems and hopefully solving your problems. But yeah. 1027. Got 36 viewers, 16 likes. Let's get those likes up to 20 at least before I leave. We got 3 more minutes left, 2 more minutes. We'll just watch Spy over here. We sold out of those call debit spreads too early, but still made $120 profit. I'll take it. Solid tool. Yeah, it's going to be the best option. Like, I'll show you what I was looking at earlier. So I'm looking at the competition. Wingman is one of my competitors for this app. Wingman Trading, I think, .com. Nope. Wingman, not Singman. Wingman Trading. So I set up the little 30-day free trial on this. I'd rather not type in my card information here. But basically all the other platforms had a very horrible user interface, and they claim to be automated. Like if you look at Wingman's front page, it literally says automated in bright blue text. But if you actually go to it, you have to import a CSV file. So you have to find the CSV file on your brokerage, and then you have to upload it to Wingman, which is not actually automated. So my plan is actually to connect to the APIs and, use your trading data from the APIs to actually import the trades themselves, instead of having you go to the CSV file, trying to find the CSV file, import the CSV file. Like, it is a hassle. So definitely going to be a useful tool for both myself and for y'all. But that is the end of the trading day for me. It is 10:30, so I will catch y'all tomorrow at the same time at 9:30 in the morning. Leave a like on your way out, and I'll see you soon.